Hi, this is Dave Dyer of Biz Radio. It's Sunday, November 23rd, 2008, and I'm thinking about the financial stocks today. You know, one of the commonest questions that I've had on the radio has been, gee, maybe I should buy Citigroup. Doesn't it look like it's really cheap? Well, there's a reason that it's cheap. You know, it's going down because they're in trouble, and now it looks like some of the news this weekend is that they might actually have to get a government bailout, and that's Citigroup. So still, at these levels, I would not recommend any of the financials. The whole industry is going to change. Their basic business model is all going to be different. They're going to come on with a whole lot of new regulation, and when this is all done, they're going to be a very boring industry. As my buddy Dan Frischberg says, they're going to be like a utility. They're going to be stable but not exciting. And that's not a great investment. So I would not look at any of the financials. Sure, they're going to have some bounces as some things get firmed up and cleaned up, but it's not a good area to look for investments. One of the things that I have discussed, you know, I taught a whole course on how to find really excellent stocks, and one of the points that I made is that a company ought to be doing something really important. That's why I like medical stocks largely, because they're saving lives. If they do something well, it works, and it works clearly, and it's obvious, and the advantages are fabulous. Banks, financial institutions, brokerage houses, do they really do something that's that important? I mean, they're basically a warehouse for the money. They lend it out. They give you a little advice here or there. But that's a business that's changing, and it's been harmed, actually, by the internet, I think. I know when I started investing, I used to pay $60, $70 and have to talk to some guy on the phone to place a trade. Well, that's not true anymore. You know, look what the internet did. It took it down to I pay $8, and I do it, you know, on with a click. Now it's true, more people are investing, and we're trading more often than they used to. So there's, I'm sure, more revenue going through. But the internet has also made good financial information more readily available. The banks and savings and loans and brokerage houses really base their competitive advantage on having some asymmetrical relationship where they knew more than the customer. They were the gateway into this whole financial world, and they had all of the traps set up in their favor where people got paid off all down the line for order flow and everything. Now, the internet lets you bypass all that. So I think the financial industry is one of these industries that has probably not benefited a great deal from the internet, because now people are better educated. They don't need as much hand-holding. They don't need that full-service brokerage house. So that's some of my argument against them. The other side of it is that the whole financial industry seems to have responded to these changes by creating much more complex products, and, you know, like the collateralized debt obligations, where the mortgages are broken up into sets of payments from this mortgage going into this bond and that one from that bond. It was, you know, the whole goal of that, it seemed to me, was to hide risk through complexity. And again, how does that help the customer? What are they doing for the customer? It's a just very simple question. And it all comes back to finding a company that's got something that's really valuable to the customer. And they don't have to fool anybody. They don't have to hide the risk with all the complexity. So anyway, that's my take on the financial industry. I think when we come out of all of this, we're going to have a financial industry that is subdued, a smaller part of GDP, and less exciting. And I think part of the reason that so many people have been sucked back in too early to invest in a Citicorp or some of these other ones is that most of the people you see on TV, most of the analysts are part of that financial industry. So that's hometown for them. Of course they think it's important. Of course they're going to talk about it. But in reality, take a step back and say, what does it really do for the customer? What do they do that you can't do for yourself? So I'm not high on anything right now in the financial industry. One of the things that is going to happen, and here's a little stock tip that I have discussed on the radio, because so much of the financial industry is in New York City, guess what's going to happen? New York City real estate is going to go down in value. How can you make money on that? There's one company, it's a REIT, symbol is SLG, company is SL Green Realty. They own about 60 or 70 properties in New York City. It's the largest or one of the largest commercial landlords in New York City. It's dropping like a rock. I tend to think we're a little late in this whole cycle to short things, but this is one that's probably going to keep on going down. I've shorted it before and I'm out. I've already covered it. But you might take a look at it. It's got that chart that I call a bowling ball thrown off a roof chart. That's the trajectory of a bowling ball if I stood on my roof and threw it off. That's what SL Green looks like, because everybody, I think, now realizes that New York City real estate's going down. Well, anyway, that's my take on the financials and why I don't really even look at them or pay any attention to them right now. Please go to our website, bizradio.com, B-I-Z. There's lots of cool stuff on there, pictures and blogs and videos and all this good stuff. Anyway, thanks.